Hi, this is Randy Finney with the Right Side of the Chart, and today is Tuesday, October 24th, 2017. I wanted to cover a few things real quickly here. I was planning to put up some static charts today, um, but I just want to follow up on the things that I've been focusing on recently, which are the broad markets, a couple of individual sectors, and maybe we'll touch on gold if we can. I have to be quick. I have an appointment today at 11:30. I need to run out to here in a few minutes, so I'll just breeze through these charts and bring up the really any developments that we've had since I did the last update yesterday, I should say. The first of all, I did mention this in the trading room yesterday, but I haven't posted on the front page. Yesterday we did have bearish engulfing candles on the large cap indices, namely the Qs. Here's QQQ. A bearish engulfing candle is when the body of a candle completely engulfs the body of the previous day's candles. The bodies are the fat parts of these candles. So we have a bearish engulfing candle on QQQ. They're not very common, and although there isn't anything 100% in trading, they're fairly reliable sell signals. You can see the last bearish engulfing candle. I'm just glancing this chart. I haven't studied it, but a quick glance, we can see one back here, and you can see from there the market dropped. Dropped for a few weeks at least. Wasn't a huge drop, but it was in the uptrend, it was marked a pretty, the biggest pullback that we've had for a while. And then right before that, you can see another bearish engulfing candle here and there, big drop. So now, what I always say, this you won't find this in the textbook. Maybe you will in some textbooks, but I like to see confirmation. That's what I mentioned in the trading room yesterday. Confirmation after a bearish engulfing candle. I like to see at least one, if not two, additional down days to help confirm it, because every now and then you do get one of these bearish engulfing candles, and the trend just continues on. So it would help. Now the markets are about flat. I think we went negative slightly at one point. We did in the Qs, almost negative in SPY today. But we did have, again, yesterday, bearish engulfing candles. We're just a few basis points away from, going red, but it only matters how we close the day. And it's not a be all end all. In other words, if we have a red candle today, it doesn't mean, wow, get out of the market, it's going to collapse. Nor if we put a green candle in today, does that completely negate the bearish nature. If we move above the top of that candle, well, that certainly diminishes any bearish implications that candlestick has. So really that's what you want to look for, move above the top or a close above the bottom of that candle in the next few days. But like I said, it would be nice to see, at least for the bearish case, some red candles now. So that's bearish technical development number one. And as I mentioned in the recent videos, I haven't had a lot of important technical developments to cover on the broad markets. We've been in an unusual low volatility, low price range, a little ramp up in the market. It wasn't a very powerful ramp, but it was a steady climb. And a couple important things to note here, besides the bearish engulfing candle, and again, watch for follow-up, we do have, as you can see closely here, we have a bearish cross on the PPO for the first time in a while. And what that does, that puts in the most recent divergent high, and a pretty powerful divergent high too. Again, it goes all the way back here. You can see the negative divergence is now in place, confirmed with that bearish crossover that we have in the PPO. So there's let's just say bearish technical event number one, the bearish engulfing candle. Look for additional confirmation. We do have a bearish crossover in the PPO, confirming the negative divergence. There's a little minor uptrend line break. I'll show you that on the 60-minute chart. And let's just show you SPY real quick. The other big large cap index I watch. I don't pay much attention to the Dow. I don't care for it. It's only 30 stocks. 30 stocks is not a diverse index. It's not very representative of the economy. So therefore, I focus on SPY and QQQ for my large caps indices. And there it is, big fat bearish engulfing candle. You can see on the SPY. I'll zoom in. You can see a little bit better there. So let's just see what happens today. I'll post some updates when I get back, particularly in the trading room if there's anything that stands out. And you can see we look like we're about to make a bearish cross. The lines are pinching together. I could throw up a histogram. You'd see it a little clearer, but let's not split hairs. You'll know when you get a definitive cross. And again, what I wanted to mention going back to QQQ, with this extreme price compression that we've had and reduced volatility, uh, all it takes is one or two or just a couple bad days, a few bad days. When I say a bad day in the QQQ or any broad market, there's a 4% drop from high to low. When we closed the day, it was about a 2.75% drop. So you look what would happen if we had, let's just say a few days. Let's just say we dropped 3%. 3% is a run-of-the-mill bad day in the markets. You get one of those bad days. It's not unusual, historically speaking, not recently, but historically speaking, to see a 3% down day. What would that do? I'm going to measure out. There's a measuring tool on the bottom there, and there's a 3% drop. That would take us down and wipe out, many weeks, if not months of gains in the market. Let's look at SPY. SPY has a lot of price compression. It's even worse than SPY. If we drop 3%, we go down to about right here. Yeah, right here. We would wipe out all the gains going back to September 11th, including September 11th, if on just a 3% drop in the SPY. So that's food for thought. We don't periods of low volatility as well as periods of high volatility, they don't stay that way forever. So just something to keep in mind if you're, a trend follower and you're long and you feel complacent in this market. Oh, it's a very safe market to be in. I don't have to worry about stops or anything. No, it only takes one spark, one catalyst to see one of those big down days. And again, like I said, we're just about one bad day away from wiping out months of gains in the stock market if we get that. So right now we're seeing some early indications of some some of the most technically significant developments, I should say, that we've had on the daily time frame in a long time. Couple that in with extreme lows and short interest, extreme overbought conditions, everything else. Just going to say the ingredients are in place for a swift pullback. Quick look at the 60-minute charts. This is, again, things that I've been updating. Nothing really new to report since yesterday on the 60-minute at least. We made a divergent high. That divergence is now confirmed. So there's negative divergence. There's your support, 253.87, as well as it's the bottom of the price channel on SPY. QQQ, there's the most recent divergent high. Prices, broke down from the minor channel, punched back up. That's where I did the video yesterday. Failed to make a new high, moved back down, but we're not really moving down impulsively just yet. However, trend indicators have flipped to bearish. We've had a couple whipsaw signals lately. We've had a couple whipsaw signals really in the past several months. But if you get one of these trends and they stick, you can see the green lines on the histogram, the green bars and the red bars. Those are your up and down trends, at least on the 60-minute time frames. And right now it's indicating the trend is bearish on the 60-minute. Here's XBI, the biotechs I've been focusing on recently. And again, guys, I am cherry picking sectors. There's a gazillion sectors and commodities and other things out there. I don't cover analysis on all of them at all the time because if I look at let's say stocks, for example, or sectors. If I look at 50 sectors or 50 individual stocks, only maybe a handful of those, do I see anything in the charts that stand out? A lot of times things aren't trending; they're just chopping around, or maybe they're trending, but there's no indication of a trend reversal. So I'm covering the things that stand out to me, and this has been one of them recently since this divergent high here on XBI, the price channel, the breakdown, the back test, and now where I'm going with this is it's come up on. I had a target zone. There's a support zone. You see it a little better on the daily. It runs from about 82.50 to 83, and so far today we came very close to that $83 level. Looks like 83.14, and that's the bottom of this zone. So I don't see anything in the 60-minute charts that indicate a bounce. However, I will say the biotechs are getting quite oversold on the daily. We've had, as I pointed out yesterday, it's just we haven't had a consecutive series other than this one green candle, and that was a doji. I mean, we barely managed to close positive. You can see there. We've had just persistent selling in the biotechs. But here's that support zone. You can see it kind of comes in right here. If I put a line there, about 82.50, 83, I should say, down to about 82.50, that lower line there. And so my take is this: if the broad markets hold up and continue to do their thing, where they have one little maybe sell signal like we just had, but then they just continue to grind higher, I would put very good odds that biotechs are going to bounce here somewhere between the 82.50-ish and 83-ish support level. And if not, if those charts play out that I just covered on QQQ and SPY, meaning we close red today or in the next couple of days we have some more red closes, the markets start to build a little momentum to the downside. Any bounce or reaction here off that first support level is likely to prove minor and fleeting, meaning we may just break through and continue on lower. There's the negative divergence on the daily chart. So again, I've been focused on the world of the 60-minute charts with both the broad markets, even XBI and the energy stocks lately. daily. But don't ever forget the bigger picture here, and it shows you, we have pretty significant negative divergence as well as coming off overbought readings on the daily time frame. So again, my outlook for the biotechs hinges largely, the very near-term outlook hinges largely on what the broad markets do here. XLE Energy, not much to update. Again, check my video yesterday if you haven't seen that update. My confidence on the near-term direction of the energy stocks, I have no desire to be long or short now. Trend indicators are still bearish. There may be a little more downside when I look at all of them. XCS is just below support, but again, on the daily, you have the potential for a nice inverse head and shoulders pattern. So we'll need to see a little bit more. We're up today. So if you can start to see this right shoulder finalize, that might be a nice long side setup. Again, if this pattern forms. And member in the trading room inquired about Halliburton, which is of course a component of XES, and you can see it nearly mirrors it. Here's that inverse head and shoulders pattern. I have it with a wedge right here. Here, I'll show you a clean board. There it is. So, and you'll see some other stocks in there that have the same thing because they are components of XES. So there it is. So look for that. That would be your neckline, something like that, and then boom, breakout, and that might be a nice long side setup, but it has a little work to be done right now. I'll wrap it up here with IWM since I didn't cover that on the broad markets. Gold, there were still the euro US dollars sitting smack between my support and resistance levels there, so that hasn't gone anywhere. IWM is doing the same thing, trading sideways recently, although it did break below this uptrend line. And bigger picture shows it, at the most overbought levels that it's been in years, if not decades, rolling off those overbought levels, breaking through that minor downtrend line. The tough thing about overbought is sometimes it's one and done when you have an extreme overbought level. That's where you get a big correction. And then many other times, especially in a bull trend, I'd even say the majority of times, it's you come back in and you put in you'll continue higher in price, and then you put in a lower high on the RSI to give you that negative divergence right here, like this, like we had back here, here. So that may or may not happen. But again, sometimes it's one and done. You have to look. I've studied this many times. You go back on these charts for a long time, and we'll just have to see. And I think where IWM goes largely hinges on what the large caps do. I know there's been some disconnect between the small and large caps recently, but for the most part, and you could overlay plots on top of any IWM, MDY, the mid caps, SPY, QQQ, and especially if you lay 10-year, 20-year charts, they're going to closely mirror each other. So that's what I'm watching right now. Just keep an eye on the large caps, see what they do in the next day or two, how they finish the week, and that will tell us was yesterday's potentially bearish, the bearish engulfing candlesticks and these the bearish crossovers on the PPO. Were those just going to prove to be another whipsaw signals in the nonstop train that we've seen lately in the broad markets or not? Just don't become complacent, and don't ever think that technical analysis doesn't work anymore just because we've had a lot of whipsaw signals. Again, in an uptrend, you're more likely to get false sell signals than you are in a downtrend. Just like in a downtrend, you're going to have more false breakouts and buy signals. But right now the trend is up, so you have to. That's why I'm saying you have to give the you want to make sure your sell signals are solid and don't jump on the first one. That's why I'm still holding off, and we haven't seen any broad market index shorts for a while. Longs, I don't see any objective level to go long. This just isn't my style. I don't trend chase just because I don't buy just because prices are going up. I have to see an objective entry to buy. So, like I say, there's other fish to fry. I do the market analysis because it helps to formulate where things might be going. Some people like to trade the broad markets, but again, the opportunities recently have been in individual stocks, individual sectors, and commodities. All right, we'll wrap it up here. I need to run. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.